Welcome to Macro Money Talk, the channel where we decode the complex world of finance to help you build wealth. Today, we are ranking every major asset class into a definitive tier list, ranging from absolute garbage to God tier. Most people struggle financially because they put their hard-earned money into the wrong vehicles, confusing liabilities with actual income-generating assets. Understanding the difference between burning cash and planting seeds is the first step toward achieving true and lasting financial freedom. We will evaluate these assets based on two critical factors: the risk you must take and the potential returns you receive. Let us begin at the very bottom with the F tier, the financial traps that keep the poor staying permanently poor. First on our list is the lottery, which is essentially a tax on people who are bad at basic math. The odds of winning are so astronomically low that you are more likely to be struck by lightning twice today. Gambling falls into this same category because the house always wins, and you are statistically guaranteed to lose over time. Next in F tier are luxury goods like sports cars bought on high-interest debt, which depreciate the moment you drive away. Buying designer clothes and expensive watches to impress people you do not like is the fastest way to destroy wealth. These consumer items do not generate cash flow. They only siphon money out of your pocket through maintenance and depreciation. If your portfolio consists mainly of these items, you are building a foundation of sand that will eventually collapse completely. Avoid the F tier at all costs if you want to have any hope of retiring before you are 80 years old. Moving up to the D tier, we find assets that are not scams, but they are often weak and disappointing investments. And commodities like gold and silver sit here because they do not produce anything. They just sit there and look shiny. Precious metals are decent for preserving wealth against inflation, but they will never make you rich or generate passive income. Single-family rental properties also fall into D tier because of the concentration risk and the headaches of managing tenants yourself. If you own just one rental, a single bad tenant or a broken roof can wipe out 5 years of profit. The return on equity for single properties is often much lower than people realize once you factor in taxes and maintenance. Liquidity is another major issue here. You cannot sell a bathroom to buy groceries when you are short on cash. D-tier assets are better than losing all your money, but they are certainly not the vehicle for aggressive wealth creation. Now we enter the C tier, the middle ground of average investments that provide safety and a modest but predictable return. Government bonds are the classic C-tier asset, offering a guaranteed return that lets you sleep very soundly at night. They are incredibly safe, but with returns of only 4 or 5%, your wealth grows at a glacial pace. Bonds are excellent for preserving wealth you have already made, but they are terrible for building wealth from scratch. Real estate investment trusts, or REITs, also belong here as they allow you to own real estate without the headaches. REITs provide steady dividends and liquidity, but they lack the tax advantages and massive leverage potential of direct ownership. C-tier is the comfort zone for many investors who prioritize not losing money over the potential for making significant gains. There is nothing wrong with this tier, but if you want financial freedom young, you need to aim much higher. Welcome to the B tier, the solid foundation where the vast majority of regular people achieve their financial independence. And index funds tracking the S&P 500 are the kings of this tier, historically returning about 10% per year. This is where the magic of compound interest truly begins to work, turning small monthly contributions into millions over decades. You get instant diversification across the best companies in the world without having to analyze a single balance sheet yourself. Dividend growth stocks also sit comfortably in B tier, providing you with a rising income stream that outpaces inflation. Scaled residential real estate belongs here too. Owning 5 to 10 properties allows you to professionalize your management systems. At this scale, you can hire property managers, making the income passive while benefiting from loan paydown and appreciation. B-tier assets are the proven path for the millionaire next door, offering a perfect balance of risk and reward. But you can become very wealthy in the B-tier without ever needing to be a genius or work 80 hours a week. Now we step into the elite A tier, where the sophisticated investors play for returns that far exceed the market average. Private equity allows you to invest directly in private companies before they go public, capturing massive value creation early on. Venture capital is high risk, but hitting a home run on one startup can return 100 times your money. Franchising is an A-tier strategy because you are buying a proven business model that already has brand recognition and customers. Commercial real estate offers longer leases and higher returns than residential, often with tenants who pay their own expenses. Accessing A-tier investments usually requires being an accredited investor and having a strong network of high-level connections. These assets are less liquid, meaning your money is locked up for years, but the payout can be life-changing. An A-tier is for those who have already built capital and are now looking to accelerate their wealth to the next level. Finally, we arrive at the S-tier, the God mode of investing, where billionaires are made and limits do not exist. At the very top is starting your own business, the vehicle responsible for 70% of the world's self-made fortunes. Owning a business allows you to decouple your time from your income, creating an asset that works while you sleep. Founders' equity is the most potent form of wealth because you are creating value from thin air, not just buying it. Digital assets and software belong here because they have zero marginal cost of replication and infinite global scalability. The creator economy is the modern S-tier, allowing individuals to build massive media brands with zero inventory or logistics. The secret of S-tier is leverage, using other people's money, labor, code, or media to multiply your output exponentially. Returns in the S-tier are not measured in percentages. They are measured in multiples of 10, 100, or thousands. This tier list is your roadmap. You must stop wasting time in the F tier and start climbing towards the S tier. Your journey to financial freedom begins with a single decision to upgrade your asset class and demand more from your money.
That sounds like a
Do
plan.
not settle for the
I'll
slow
finalize
lane.
the report by tomorrow.
Master these
Enjoy your
tiers,
day.
understand the risks, and build the portfolio that buys your freedom. Thank you for watching Macro Money Talk. Subscribe now to Master Your Money, and we will see you in the next video. Remember, the only ceiling on your wealth is the level of leverage and risk you are willing to intelligently manage. Start today by auditing your own life. Identify every F-tier habit you currently have and ruthlessly eliminate it immediately. Take that money you saved and automate a monthly transfer into a solid B-tier asset, like a low-cost index fund. Education is the bridge between tiers. The more you learn, the more comfortable you will become with A-tier and S-tier risks. Patience is your greatest ally in the B-tier, while speed and execution are your greatest weapons in the S-tier. Surround yourself with people who talk about ideas and assets, not people who talk about spending money on liabilities. Even luxury goods can become assets if you are smart enough to turn them into rental businesses that generate revenue. A healthy portfolio might mix safety from the B tier with the explosive growth potential of the A and S tiers. Visualize the person you want to become. That person does not waste money on F-tier garbage. They invest in their future. Wealth is not just about money. It is about the freedom to live life on your own terms without financial stress. Every dollar you earn is a seed. You can either eat the seed now or plant it to harvest a forest later. Reinvesting your dividends and profits is the fuel that accelerates your journey from the slow lane to the fast lane. The climb out of the F and D tiers is the hardest part. But once you reach the B tier, momentum takes over. Build a financial machine that works for you, so you do not have to work for money for the rest of your life. True wealth is also about legacy. Teaching your children these tiers ensures that your family stays wealthy for generations to come. It is never too late to start. Whether you are 20 or 50, you can shift your strategy and improve your tier. Run the numbers yourself. See how much a simple shift from D tier to B tier can change your final retirement number. Stop hoarding paper cash, which loses value every year. Convert that paper into real assets that produce value for society. Discipline is the ability to say no to short-term pleasure in the F tier, so you can say yes to S tier freedom. Look at the richest people in the world. None of them got there by saving coupons. They got there by owning equity. Ownership is the key. You must own a piece of the pie, not just work for the bakery for a wage. Start small. Your first S-tier asset might be a side hustle, but it can grow into a massive empire over time. The S-tier also offers freedom of location. Digital assets allow you to live anywhere, while your income comes from everywhere. Your goal should be for your passive income from B and A tier assets to eventually exceed your active monthly expenses. Financial literacy is the key that unlocks this door. Without it, you are locked out of the best opportunities forever. The rat race is designed for people who stay in the C and D tiers. You must engineer your escape plan. Eliminate bad debt immediately. Paying 20% interest to a bank is like trying to run a marathon with an anchor. Treat your finances like your health. You cannot eat junk food every day and expect to be fit. Money works the same way. Now read the biographies of billionaires. You will find they all focused on A-tier and S-tier assets to build their fortunes. Do not be afraid of complexity. Complexity is often the moat that protects high returns from the average, lazy investor. Your financial roots must be deep in the bad tier so that you can safely reach high into the S-tier branches. Money is a tool for good. When you have abundance, you can help your community and support causes you care about. Let this tier list be your compass. Whenever you are about to spend money, ask yourself which tier that money is going into. You do not have to jump to S tier tomorrow. Just taking one step up from F to C or B is a victory. Remove the temptations that keep you poor, unsubscribe from marketing emails, and delete the apps that make spending too easy. Replace your consumption addiction with a creation addiction. Get addicted to seeing your net worth grow every single month. Adopt the mindset of a producer, not a consumer. Producers get rich while consumers get bills, debt, and stress. Share this video with a friend who needs to wake up. Financial freedom is a team sport and you need allies. Keep your eyes on the prize. The short-term sacrifice of not buying a new car is worth the long-term freedom. We are building a bridge to your future self. Do not burn that bridge by making stupid F-tier decisions today. Write down your goals. Be specific. How much do you want in your B-tier portfolio by the end of this year? It will be hard work. Anyone who tells you that getting rich is easy is probably trying to sell you something. But the view from the top is worth it. Financial independence gives you the power to say no to anything you dislike. Imagine a life where you work because you want to, not because you have to pay the rent next week. That is the promise of the S tier. It buys you back your time, which is the only asset you cannot replace. Arthur's game of money has rules. We have just explained them to you. Now it is your turn to play the game. Take control. Do not let the government, the banks, or the marketers dictate your financial future. You are the CEO of your life. Ignite that fire within you. Let the anger at your current situation fuel your discipline to build a better portfolio. Review this list often. As you age and your wealth grows, your allocation across these tiers should evolve and change with you. I believe in you. You have the knowledge now. The only thing missing is the execution. Go out there and execute. The universe rewards value creation. Create value in the S tier, invest it in the B tier, and avoid the F tier traps. This has been Macro Money Talk. If you found value in this video, please smash that like button to help the algorithm. Don't forget to subscribe and turn on notifications so you never miss a lesson on your path to extreme wealth. Thank you for watching Macro Money Talk. Subscribe now to master your money, and we will see you in the next video.